Imagine this. You're scrolling through social media, watching people brag about passive income, showing charts of their investments, and you think, that's not for me. I don't have thousands of dollars to start. But here's the truth most people don't realize. You don't need a fortune to begin investing. In fact, some of the most successful investors in history started with tiny amounts. And what made the difference wasn't money, but consistency, mindset, and knowing where to put their dollars. If you've been holding back because you think investing is only for the rich, today's video is going to prove you wrong and show you step by step how to start with little money and still build wealth over time. So let me ask you, if I gave you just $50 right now, would you know where to put it to start making it grow? Most people wouldn't. They'd either spend it on fast food, subscriptions, or something they don't even remember a week later. But here's the secret. Those same $50 could be the seed that grows into thousands if you know how to play the game of investing. That's what we're going to talk about today. The first step is shifting your mindset. Stop thinking that investing is about getting rich overnight. It's not. Investing is about planting seeds that grow slowly but consistently into trees that give you shade and fruit for life. If you're starting with little money, your greatest weapon is not the amount. It's time and consistency. The earlier you begin, the more compound interest works for you. That's why people who start with $50 a month in their 20s often end up wealthier than people who start with $500 a month in their 40s. Now let's get practical. One of the easiest ways to begin is through brokerage apps that allow you to buy fractional shares. You don't need to purchase a full share of Tesla or Apple. You can literally buy a small fraction of it with as little as $5 or $10. This democratizes the game. You're no longer locked out because of price tags. Another option? ETFs. These are bundles of different stocks that trade like one single stock. Instead of guessing which company will succeed, you invest in a basket of them, spreading your risk. And the best part? You can start small. Another powerful beginner move is automating your investments. Set up an auto transfer, even if it's just $20 every payday. Why? Because consistency beats intensity. Think of it like working out. You don't get fit by going to the gym one day for 10 hours. You get fit by going 3 times a week, every week. The same goes for investing. That habit builds momentum, and over time, your small contributions become something massive. Before I move on to the next crucial steps, let me throw a question to you. If you had to choose between buying your favorite gadget this month or putting that same money into an investment, which one would you honestly pick? Drop your answer in the comments. I want to see how many of you are ready to choose long-term freedom over short-term pleasure. All right, now that you understand mindset, consistency, and where to start, let's talk about the next steps to level up your small investments. Because here's the truth. Starting is amazing, but building a system that keeps growing is what will separate you from everyone else who quits halfway. Step 2 is diversification. When you're investing with little money, it might feel like you don't have enough to spread out, but you actually do. For example, if you put $10 into a stock, $10 into an ETF, and $10 into a high-yield savings account or government bond, you're already diversified. Why does this matter? Because if one area crashes, you don't lose everything. Think of it like building a table. It needs more than one leg to stand strong. Step 3 is to reinvest every dollar you make. If your stock pays dividends, don't cash it out to buy coffee. Reinvest it. That's how compound interest becomes unstoppable. Albert Einstein famously called compound interest the 8th wonder of the world, for good reason. It's not about huge wins. It's about letting your money make babies that make more babies. Another tip, avoid emotional investing. This is where most beginners fail. They panic when prices drop and sell at a loss. Or they get greedy when prices rise and buy too late. If you're investing with small amounts, the best strategy is dollar cost averaging. That means investing the same amount consistently, no matter if the market is up or down. Over time, this smooths out the highs and lows and gives you better results than trying to time the market. And let's not forget the power of education. Investing with little money also means you can't afford big mistakes. So learn as you grow. Watch financial channels, read beginner-friendly books, follow trustworthy voices. The more you know, the better decisions you'll make. But don't let not knowing enough stop you from starting. Remember, action beats perfection. Finally, let's end with this powerful mindset shift. Your first $100 invested is not about money. It's about becoming the kind of person who invests. Once you cross that line, you'll never look at money the same way again. You'll see opportunities everywhere, and you'll realize that wealth is built step by step, choice by choice. Now, I want to hear from you. What's stopping you from starting today? Is it fear, lack of money, or not knowing which platform to use? Drop your answer in the comments, because I want to address your doubts in the next video. And if you're serious about changing your financial future, remember this: don't wait until you have enough to start investing. Start with what you have, where you are, right now. The best investors in history didn't wait for the perfect moment. They just began. And so should you.